In this video, I'm going to show you an important strategy that you can use to trade gold immediately. Okay, so in this very video, you're going to learn that very strategy and it have 80% win rate. So let's dive right into the video. If this is your first time here, my name is Paradise. On this channel, I discuss everything about Forex, day trading strategy to keep you profitable. Please support this channel by leaving a like for this video, subscribe to the channel, and turn on the bell notification for more Forex videos like this. Also check the channel for other Forex videos and educational content. Right here on gold, we've seen that the market is in an uptrend. So the first step to this strategy is for you to use 2 time frames. Okay, in this case, I'm going to use 1 day chart and 4-hour chart, as you can see right here. So on the 1 day chart, which is the higher time frame, because this is like a top-down analysis, okay, multiple time frame analysis. So the first step is you open your higher time frame, and your higher time frame can be on 4 hour, 1 hour, 15 minutes, as the case may be, and your lower time frame can be a time frame that is lower than your higher time frame. So in this case, I am using 1 day chart as my higher time frame, and I am using 4 hours chart as my lower time frame. So the first thing you define here is an uptrend. So we want to see that the market on the higher time frame is in an uptrend. Let's say, for example, in this case, market move all the way from this area, move up, and then we see retracement, and the market move up again, and then right here we see retracement. So what we want to do in this strategy is to wait when we see retracement in the market and figure out the end of retracement, just like in this case, end of retracement before the market will make the next move to the upside. End of retracement before the market will make the next move to the upside. And we can only define the end of retracement in this very case if we look at what is going on the lower time frame, and that is why the lower time frame is very, very important. So let's say in this very case, we have the market to move all the way from here upward, and then we see retracement right here. How do we know that this retracement have ended at this very area and that market is going to move upward? And this very concept is one of the most difficult tasks for a lot of new traders. They don't know when the retracement ends in the market. At least it should be about 80 to 90% of the time. And if you can define this, it will create a great shift for your success in trading. So in this very strategy, when you have defined your trend in this case and wait for the market to retrace of this very impulsive move to the upside, we want to find an entry from this very area to the upside so that we can ride the massive trend upward on the lower time frame. So on the lower time frame, which is the 4-hour chart right here, what you have to do is to ensure that the market has been going down and creating new lows. Let's say, for example, if you look at it here, market move downward, this is very important, and then move upward, fail to create a new high, which is a fail swing at this very point. The market come back down, create a new low, very important, lower than the previous low at this very point, and then we see this very retracement again, and then market come back to the downside but could not create a new close. Market only come down into this very area and then grab liquidity at this very point and shift back to the upside. Now, what we can deduce from this very movement is 2 things. Number 1, there was high momentum here, market retrace, and then reduction in momentum at this very point, market retrace, and finally we see a loss of momentum from the sellers, from the bears, and the market is at this very point right now, as you can see on this chart. So what it means is that momentum have reduced up to this very area, and it implies that the bulls are going to take control of the market to the upside. So since we now know this and there is a failure of the market to create a new close, it means that retracement is coming to an end on the higher time frame. So in this very case, it signals the fact that market is about to move upward on the higher time frame so that we can ride this impulsive move that we are seeing on this chart. Look at it here. Market move all the way from here upward, you see retracement, and then move upward and then retracement. So it means that the next impulsive move is about to start to begin on the higher time frame, which is 1 day chart in this very case. So what you have to do on the lower time frame is when you see this, it is time for you to take a trade. So after loss of momentum, as you can see in this very case, the next thing is a fail swing, which happened at this very point. Market failed to create a new close, and then right now market is moving upward. The last confirmation you need to take into consideration for taking a trade is to look at the next resistance. The next resistance is this very area right here. So once you see a close, a bullish candle that closed above this very area, then it means it's the right time for you to take a trade. Another example that you can see here is the market have to go above this very area. That means create a new high. Let's say, for example, in this case, you have to allow the market to move upward a little bit and create a high higher than this very peak right here. Once you see that, it's another entry confirmation. So these are the two entry confirmation you need to take note of after you've seen, number one, a reduction in momentum, number two, a fail swing, which happened at this area. Then you begin to look for this very scenario where the previous resistance have to break. That means market have to go above the previous resistance in this very case, where we see this very chart move upward and create a new high at this very point. This is where you need to take your trade. So if you look at this on this very time frame, which is a 4-hour, as the market is moving right now, I am looking at the market moving to the upside. So if I take my long position tool, this is my entry right here, and your stop loss have to be below the previous low, okay? And the previous low is at this very point. So from this very area right here, I will put my stop loss at this very point, and then my take profit target have to be 2 times my stop loss, okay? So from my entry to this very area, this will be my take profit target right at this very point, okay? So from this very area to this very point, I am expecting the market to move upward up to this very area of important resistance. Another example is seen right here on this very chart. So if you look at this very chart right here, on the 1 day, if you look at it from this very point, you see that the market was moving upward from this very point upward, and the market retrace. Now, for you to define the end of this retracement, you have to go back to the 4-hour chart and look at momentum. Market have to show a loss of momentum. That's number one. And then secondly, market have to have a fail swing to the downside. That's number two. And then you have to look for the market breaking the previous resistance. Look at it right here. So market was coming back to the downside on the lower time frame, in this case 4-hour chart. So from this very point, if you read the rhythm of this very market, you discover that market come back down. That was an impulsive move for this very case, and then retrace, fail swing, come back down for this very area, create a new low, lower than the previous low at this very point, and then move up again at this very area. We saw two things. Number one, reduce momentum. Market was not able to create a new low. Okay, so this is a fail swing for us in the market. So from this very area, market have capacity of moving to the upside. So we need to look for our confirmation, and our confirmation, like I said, is for the market to move upward. You have to wait for the market to move upward and break this very level of resistance. And this candle gives us that very confirmation. Market to move into this very point and then come back down a little bit, as you can see on this very candle right here, this bullish candle. So once we have this, market have capacity of moving upward. This is only when we can take a position after the close of this very candle. So if I take my long position 2 in this very case, and then I place it at the close of this very candle, which is the opening of this very one, your stop loss have to be below the last low we see when the market was coming back to the downside. And the last low here is this very area. So our stop loss have to be below that, which is this very point, and we are looking for 1 to 2 risk reward ratio. And if you look at it, this market give us even more than 1 to 2 risk reward ratio. But to keep it simple, just 1 to 2 risk reward ratio is a guarantee, okay? 80% guarantee. Now, this will not just let you get a massive move like this in the market, but it will also make you ride massive trend in the market. If you look at this, if we enter this trade at this very point, just like I make this example right here, and then our stop loss is at this very area, and then our take profit target is just 1 to 2 risk reward ratio, it is covered that after then the market retrace back to the downside and begin to ride massive trend to the upside. This is a very important strategy to know end of retracement on the higher time frame using the lower time frame, and that will allow you to enter a trade on the lower time frame to ride massive trend on the higher time frame. This is very important, and the same strategy apply when the market is moving to the downside. That is for a short position, you looking for short opportunity in the market, and I will do that in my upcoming video. So this is very important. This is how you use this very simple strategy right here to ride massive trend in the market. Like I said, this very move that you're seeing right now on the chart, I am expecting that the market from this very point where it is right now move to the upside. So it is a nice trade to take at this very point, and your stop loss have to be below this very last low of this move to the downside. So your stop loss is below this very spike that we see right here in the market, and market is going to from here move to the upside. This is very important. Use this strategy and comment below how it worked for you. Support this channel by leaving a like for this video, subscribe to the channel, and turn on the bell notification for more forex videos like this. Thanks for watching, and I will see you next time.